Welcome back to Market on Close. I'm Renita Young, filling in for Oliver Rennick. And let's get to our next panel here with a couple of our buddies over at Charles Schwab. And this week, we're looking at the market action with Kathy Jones, Chief Fixed Income Strategist at Charles Schwab, and Michelle Gibley, Director of International Research at Charles Schwab. Kathy, we'll start with you. We saw a jump in yields this week, plus comments from the Fed. What are your thoughts on market action so far this week?
Yeah, I think this week has been all about the Treasury market trying to readjust its expectations for the terminal rate. You know, we had the strong employment numbers, a rebound in the ISM figures, and that's driven expectations that that terminal rate might move even above the 5.25 level that we saw in the Fed's dot plot last time around. We're kind of got this bidding war going now, my analysts, to see who can predict the highest terminal rate. I think 6% is the high that I've heard so far, but you know, between now and the next FOMC meeting, it could go even higher. So a lot of that is just moving up across the yield curve, particularly at the short end, to adjust to where the market thinks that terminal rate is going to be, and closing the gap between where it has been and where the Fed has been. Long-term rates have gone up as well, but we've further inverted that yield curve. So if I look at next week, I say it's all going to be about CPI and, you know, and what the expectation is that the Fed's response to that will be.
All right. Well, Michelle, what were you focused on this week?
Well, you know, as Kathy mentioned, there's been some repricing of what the terminal rate might be for the Fed, but that's also true for global central banks as well. So there was a bit of a sell-off in stocks this week on concerns that central banks may have to raise rates more than expected. We had the Central Bank of Mexico raising rates by 50 basis points instead of the 25 expected. The Central Bank of Sweden was a little more hawkish than expected, and also the Reserve Bank of Australia warned of further rate hikes, that would be plural, after kind of signaling a potential pause back in December. So currently, markets are expecting rate cuts by most of the major central banks later this year. But if those cuts fail to materialize, stocks could sell off.
Michelle, since you brought up major central banks around the world, let's look at international stocks and how they've performed this year. What are you seeing so far as we're just in the second month of 2023?
Yeah, international stocks have outperformed this year, and they could be the new market leader. Where stocks are looking ahead to the next economic cycle, and new economic cycles tend to bring new leaders. As such, we could see international stocks outperform, and that's kind of breaking that decade-long trend of underperformance. And so international stocks are benefiting from better than expected earnings growth and a weaker dollar, as well as higher quality factors such as high dividend yields and low price-to-cash flow ratios.
Kathy, over to you now as we look at more inflation data to come next week. What are you keeping your eye on? Can you give us any expectations you have?
I think we'll get the CPI data, but I think it's important to remember that the Fed doesn't really use CPI as its major, benchmark for measuring inflation. That's the personal consumption expenditures data, and that's not coming out next week. They're going to be, for CPI, it's worth noting there's going to be some revisions to the previous couple of months. I don't think it's all going to wash out, the seasonal adjustment, but that's something to pay attention to because it might throw off some of the estimates. But I think the long run picture for investors is you need to look at the fact that you can get the highest yields in decades right now without taking a lot of risk. And if the Fed does its job, which I don't doubt that they will continue to work on bringing inflation down, and that's pushing real yields up. And that's an opportunity. So what we're really watching is less about next week's CPI, although that's going to get the headlines and be a market mover. And it's more about the big picture. Where is inflation going down the road? And that likely to continue to go down as central banks tighten around the world.
Now, as we look at yields, bonds become more attractive to investors. Are you seeing more investors go into bonds this time around, or are they on the sidelines? Kathy.
We've seen big inflows into fixed income over the past year, really as rates have gone up over the past 6 months. And I think that trend will continue. A lot of investors, though, are focused on just staying very short because they say, well, I can get 4.5% or 5% in a short maturity bond. Why should I go out the yield curve and buy more and the, at lower yields? But I think that as we get to a point where there's more confidence in inflation, you'll start to see people recognize there's reinvestment risk, and that it would make sense right now to start layering in a little bit more in intermediate term bonds, at least in order to lock in those yields for the next couple of years.
Michelle, when we talk about global central banks, one more time, I just want to circle back to that because we saw some of them raise their rates to the highest in decades last year. Do you expect a similar performance this year?
Yeah, we're expecting central banks to continue to raise rates, particularly in the early part of this year. And then, the market is expecting potential cuts later in the year. The big outlier probably is the Bank of Japan, which is yet to really raise rates. They've changed the range on their yield curve control policy, but not to start to raise rates. And then China, which has been very easy in its monetary policy because its growth last year was quite slow.
All right. Thank you both so much for joining me today on TD Ameritrade Network. We definitely appreciate your wisdom. As always, that was Kathy Jones, Chief Fixed Income Strategist for Charles Schwab, and Michelle Gibley, Director of International Research for Charles Schwab.